All right, let's do a visual and audio check. How's everybody doing tonight? Can you guys hear and see everything okay? As you guys go through that, I'll get a few things set up on my end. I'm going to move a little bit quick. We're starting just a tiny bit early. But good, everything's looking good. Perfect. Thank you, everybody. So let's get started. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA. As always, there is our Top Step risk disclosure in the chat. This is not a signals class. This is for educational purposes only. That being said, let's go ahead and jump into this gold. Every single night at 8 p.m. Central Standard Time, we've seen a nice spike in volatility in gold. This is an hourly chart, and the first thing that I've noticed is we are at a area of support and resistance. You can see there's some nice, resistance back on June 7th, some resistance on July 5th. Then it became support July 12th, and now we're right at the support area on, July 19th. And so the question is, does this look like a nice rally where we consolidated? If you guys, this is a very common pattern. We consolidate and we break up, and it looks like we could see a pullback and then a continuation to the long side. So it's looking very attractive to the longs. And we zoom into a 5-minute chart, and I'm going to go ahead and let's just go buy one. Let's buy one. This is a combine, and let's talk about. So yeah, we're already down to a 5-minute chart, and you can see we had a lot of consolidation, and we had this nice rally, and then we consolidating a little bit. And so let's see if we could catch a break to the long side. A few things that I'm already looking at. We must have a decent stop loss. And if we could break up above 11.8, and then we could see another test of 13, and then maybe even higher. We did open up, and ever since the open, we've been rallying up. Or this thing could reverse and come right back down towards 2,400. But anyway, let's see. I think that's it for this gold. And guess what, guys? This is going to be a special week for everybody in the chat. It's going to be a very, very special week for the audience. Every night tonight during slow markets, I will be going over my strategy the second half of class. So this first half, we're going to be solely talking about the markets. We're going to be doing the rapid fire, and then maybe a couple questions. But then the second half of my slow markets class tonight, all the way till Thursday night, we're going to go over specific details of my strategy. And I'm going to go ahead and just close this position. We are starting to break down, and maybe we head back down to these lows. That being said, do we play a break? I feel like the time to reverse was up here around 2409. I don't know. Took a small loss on that one. I wouldn't be too afraid to reverse and see if we can get down to 2402, 2403. That is a possibility. And now here we go. We're starting to break down a little bit. We'll go over this trade. I had a trade right before class, and I'll talk about it, but it looks like gold's starting to break down. That was the play, to be patient and wait for that break, because we didn't get the break to the long side, but we are getting a little bit of a break to the downside. And the first area of profit that I would be looking at is maybe 2406. There is an area of resistance support. Maybe you can argue 2406.8. And then, of course, 2404, and finally about where we opened up tonight. But we got chopped out a little bit. I got in a little early and got punished for it. So anyway, that being said, let's continue our regular session. Let's talk about the regular rapid fire. And like I said, it's a very special treat for everybody in slow markets. as promised, I want to make sure I'm giving the most value to people who are watching my slow markets class. And I think that's going to be in the form of going as far in depth as possible in my strategy. And since everybody who is here, you guys get to ask me questions, and hopefully I could be able to answer those questions live regarding my strategy. And I'm going to talk to the team about, recording the second half of each of my classes this week and seeing if we get a nice playlist of what my strategy is and doing some Q&A. So as we go through that, let's go ahead and do our rapid fire, and let's start with the NASDAQ. First, I want to point out my trade. I just had one trade. This is a combine. I am still waiting for my live account. So this is a combine, and let's see if I can remember how to show this one. There you go. So I'll just talk about this really quick. Just quick in and out. $4,500 on this combine. But this is a very basic pattern, very similar that I was just looking at on gold, but this is the NASDAQ. Let's go ahead and look at a 5-minute chart on the NASDAQ. Let's go here. And let's zoom out a little bit. So here is the 5-minute chart on the NASDAQ. We've had that nice sell-off during the Friday, and we opened up, we gapped up, we opened up really bullish, we rallied really hard, and then we pulled back, and sure enough, support, or this was resistance. This is a very strong resistance, as you guys can imagine. If I could show you this is a very strong support and resistance zone, and it even started to become support and resistance tonight during the open. And so we sold all the way off, we consolidated, and then I got in as we started to show more support. And just quick in and out, I actually captured 15 points on this trade, the full max profit, and then of course I gave a little bit back, which on that gold trade. But that being said, I'm going to go ahead and get this off because it's distracting on me, and we'll do a full analysis for this. And feel free, like I said, feel free to ask questions. If I don't get to them now, we have amazing moderator, and I'll be able to get to them. But the first couple, Raising Sailor, Dakota, who works for Topstep Trading Combine. Why? I'm just like you guys. Raising Sailor is I have to go through the same thing as everybody else. There's no special treatment. I pay for combines the same price that everybody does, $150 for the 150K, unless I could get one of the discounts that Topstep does all the time on TopstepTV. And I go through the same thing. There's no special treatment. It's all, above, what do we want to call it, above board. And I would love to have special treatment, right? But that's not the reality. I'm not lying, Fire Drill. That is the reality. I show people all the time. I pay for them just like everybody else. And that's how it is. No such thing as commingling funds. No such thing as, giving the special treatment. But let's go through our regular rapid fire, starting on the daily here on the NASDAQ. And we're at an interesting spot. We really are. We're at a spot in the NASDAQ, and going into Friday, this was a key area. If you guys were watching Coach Jay and I talk about the markets on Friday, this is a very, very important technical level here on the NASDAQ. And you can see back on June 13th, this was some support. Again, it became support on June 14th. And once again, the 24th and the 25th, we sold off there Friday, and we ended up holding. We did close below that just a little bit Friday, and then when we opened up back inside this range. And so very much we can see some buyers come in and step in around this. And so it's a little bit scary of a location to trade in terms of if we start to sell off, this market could sell off really hard, and maybe we go back down and test 19,100 to 19,200s, if that makes any sense. And that's quite the sell-off, and very much we could have this sell-off continue. However, there is one thing that I continue to point out is we're looking at expected moves. I wasn't expecting this big of a sell-off, right? When we were all the way back up towards 20,000, above these 20,600s, I was looking for maybe a little bit bigger of a pullback. I wasn't expecting this big, and here we are again. And the last time we sold off this much was back in April, right? Back in April, we did have a similar pullback. If we measure it, that's really close to what we're seeing. And again, this has happened, it looks like, about 3 times at the end of last year, where if we measure these moves, in the middle of October, that's it's pretty dang close to that level. And if we measure all of these, right? We measure all of them, it's getting really close. And so that begs the question, are we going to be expecting a bounce? Because, we could sit here and talk about news events that cause these sell-offs, and we could even go back further to 2022 and see some of these bigger sell-offs. But in the reality of the market condition that we're currently in, we are still bullish. And if anything, in terms of like technical analysis and pattern and expected moves, we are about there. We really are. And so I would like to see us consolidate first, or I would like to see some type of reversal pattern. And here is an example. I mean, it's very hard to pull a good example. Here's one of them, right? This is a very simple and easy example to see. This is a 3-bar reversal. We have a consolidation candle, and then we have a clear reversal. And, we could see it time and time again, some type of reversal pattern at the bottom of these pullbacks. And so I definitely want to see something that can trigger me in, right? This is a very nice one, right? This is a huge reversal pattern and just a rejection of these lows. And what do we call these? A doji, a hammer, whatever you want to call this. And then we start the reversal and then a continuation of the trend. I would like to see something first to signal, okay, we are now consolidating, and then we reverse, rather than just jumping in now. And so the top and bottom of this candle is now the range that I'm looking at. It was this one before. It was the 18th, and now it's going to become the 19th. And so I'm perfectly fine seeing if we can break above the high of Friday's candle, or we break below the low of Friday's candle. And everything inside I am going to be looking at as consolidation. I would love to see consolidation. You could see back at the end of June, we consolidated for a whole week. And the longer we consolidate, the better the breakout is when we do break out in one direction or the other. So I would love to see us consolidate. Maybe if we have some smaller days, not as big of move, less volatility, and then we break out to the long side, I would love to be a buyer if we do break above basically 20,000. I think 20,000 is going to be a key level, as it was back at the end of June, but we'll see. I'm not as bearish. I'm not as bearish at all. If we do sell off, of course, we could see it, 19,100 to 19,200. I'm getting a little bit more bullish in terms of, the further and the deeper the pullback, the more I'd be looking at just looking for buying opportunities. But we'll see how it goes. Let's zoom into an hourly chart, and I'll go over a little bit more in depth. Let's see. Yeah, you can see this. It's a little bit more clear from the hourly. See those beautiful, clear support and resistance around this zone, around the 700 zone. Basically from like the low 700s to, yeah, pretty much 700s. Like this is a pretty big zone, and it honored it again on Friday, where this is the hourly chart. You can see where we've really struggled to go down below 700s. There's a lot of wicks. We consolidated for 4 hours. And so, yeah, I can imagine on the 4-hour chart, this could be a doji. This could look very look like a reversal. And then we rallied up. And so now my next question is, are we going to be holding above this level? This is a key zone. As you can see, when we went down below it, we resisted it. And can we hold above this? We held above it Friday. What is this? This is London session. So this is Friday, all throughout Friday during the overnight session. And then even Thursday, a lot of Thursday afternoon, we held above this. So very much, if we can hold above, I would say like 750, 740s, we could see maybe a rally back up towards the 900s, the 920s, 930s, up towards this next resistance zone. And so if we do get that, I'm going to be looking for these highs of Friday as a target for longs, or as maybe a location for some possible shorts. So that's the NASDAQ. Let's take a look at gold again, and then we'll jump over to crude oil. Gold, I think it's the same analysis. I talked about it briefly. We broke down and we went right back up. Very whipsaw as of late. I'm going to stay away from gold. Maybe that was a higher low as a pivot. And if, like I said, if we zoom out to a daily chart on gold, we're still bullish, right? Because the overall trend is bullish. We did break through all this resistance here, and we're still staying that. One thing I do want to mention is we are, as I was showing you on that lower time frame, this is a key level for resistance, and it could become support, which it looks like that's what it's doing right now. And then when we zoom into that hourly chart, it's a lot more clear. Yeah, there we go. Yeah, it's really clear, right? There's resistance, support, and if we keep looking left, there was that resistance again. So I wouldn't be surprised if we rally right back up to the mid 20s, maybe 430, 2430 here on gold, which we are starting to catch a bid. And yeah, I think long was the play. I got in early. It whipsawed us a little bit. And if we do break above the 2413s, maybe 2414, we can see a push possibly back up to the 20s. So, all right, I think that's all I'm going to say on gold. Let's talk about some crude oil. Crude oil, we sold off hard on Friday, and I think the trend is going to continue, where we look at the daily chart and it's still into play, where this was the pattern I've been looking at for the longer term on the daily. Let's just take a look at this. And sure enough, it's coming into fruition where we could very well see this bottom trend line test. We still have a lot of resistance support to break through. We're starting to break through it. We're all the way down. You know, we tested below $79 a barrel. I think the next key level, just based off of what I'm seeing, is going to be right about, I don't know, 77s. I mean, it's a pretty decent zone here where you can see there's a lot of support in this zone between 77, yeah, all of 77s, I think. And you can see it even came into play on this right here at the upper 77s. And again, it's same thing. This is a key support zone that it's played for the most part of the year. And even all the way down to, yeah, there's a lot of support. So we have a long way to go. And if we do start to sell off, maybe I could consider looking for some longs down around 76. If not, I couldn't imagine why this wouldn't want to sell all the way back off to the bottom of this trend. It's just heavy. It's been very, very heavy, and every rally has been selling off. If we look at a 60-minute chart, it's the same thing, right? Sell off continuation. It's that very basic, pattern that we were looking at, this double top, and we're continuing to make. Let's see if we could lock this in. Does this work? Nope. Yeah, we continue to make lower lows and lower highs. We just made a lower low. And so do we go back up and make a lower high? Maybe we could get up to 80 and then have another leg lower. I'm not sure, but this is the pattern that I am looking at. And, I'm not seeing it break to the long side anytime soon, unless some type of news does affect it and then it just screws up and it completely changes. But yeah, I definitely see us coming back down to at least maybe 75. Maybe we come down to 75, the bottom of this trend. I do see there's a lot of support in this zone around that 77 that we were looking at, the $77 a barrel. So maybe 77 is on the books, and it's just a matter of time until we get there here in crude. Next, let's get rid of all this. Talked about gold, NASDAQ. We'll briefly talk about Nikkei. Like I said, we're coming up, 8 minutes left. I'll get to some questions, and then we'll start going into my strategy and hopefully go further in depth. Nikkei is very similar to the NASDAQ in terms of what I'm seeing is we've had the huge rally the first half of July, first basically 2 weeks, and immediately we're just completely selling off. We went all the way up to 42,500, and now we're completely selling off all the way down to, we broke below 40,000. Maybe we could even see 39,200s into play. If not, maybe we even see 38,000, the bottom of this lower range. But it's in a down trend. There's a lot of selling pressure going on right now in a lot of these markets. Let me take a look at gold again. Are we still kind of consolidating and breaking out? But nope. Okay, let's get to some questions, and then we will go over the beautiful, what so many traders were waiting for. So I'm going to do it exactly at 8:30 p.m. Central Standard Time, so that way it's easy to track, and it's going to be easy for our team to come in and edit the video and make it into a playlist for everybody. It's just I've been thinking over the weekend how I'm going to do it. I think it's not going to be as organized where this is a slideshow. This is step A, B, C, D. It's going to be, relatively informal, and we're going to go and we're going to only talk about my strategy and the way that I've been doing the markets. I have been trading the markets the last 30 minutes of every single class this week for slow markets. Now remember, guys, it's more than just one strategy. There's many different strategies. For example, I trade a little bit differently than like during slow markets. I trade differently when I'm trading the London session, when I'm trading the New York session, and then I trade differently depending on whether we're trending, whether we're consolidating, and then whether there's news, right? So there's a lot of different ways that I like to trade, but I think I'm going to just try and go over the overall, style, the overall technique. Maybe we could talk about the way I view risk. And a half an hour times, tonight, tomorrow night, all the way till Thursday night. So it's going to be a lot. And I'm going to be able to answer some questions that you guys have. And now remember, this is recorded, and I will work with our Topstep team to get this maybe into a playlist. And it's going to be interesting to see how it goes. Yeah, there's going to be a lot that we're going to be going over, guys. Still 5 more minutes, but let's get to a couple questions. Actually, as I'm watching gold, I kind of just want to get in long because we're getting ready to break out, it looks like. I'm going to get into a long on gold. Yeah, I'm going to see if we could break out of this $14 a level, see if we can make a run up to 20s. We'll let this play in the background while I go over my lesson. Something for everybody to watch through. Dakota, Tesla and Google have earnings this week. Thoughts? Yeah, just like with any earnings week, they will bring volatility into the markets. Yes. Biden dropped out, or we already talked about it. I think all of the political news that's happened over the weekend has already played a lot into the markets. The markets have given its time to digest of any political news that's happened so far. And as of right now, the markets are reacting relatively mild. So there's not much to be said other than that, right? Please answer, does U.S. election uncertainty affect the gold markets at all? I think it would, right? Whenever and we talked a little bit about this Friday, whenever we're talking about politics, because that's been on everybody's mind, is the markets like uncertainty. And whenever there is uncertainty, then we see some volatility into the markets. If I was to guess, now remember, just because we have our opinion on what one event will do to a specific market, doesn't mean the market's going to react the way that you think it should. For example, I believe that if there is uncertainty anywhere around the world, then gold is a safe haven asset, and it would make sense that gold goes up if there's a lot more uncertainty into these markets. But we'll see. All we could do is see what the market reacts. We could trade what's in front of us and trade from a technical standpoint. So hope that makes sense. What's your risk parameters? How much do you risk on the 150K? And how many trades a day do you take? We're going to be going over this in about 2 minutes. We're going to go over those questions. So if you have questions specific to my strategy and specific to how I trade, stay tuned. Okay, let's just take a moment, go through. We're going to be able to watch. I'm going to try and explain it and then ask whatever question you might have as it pertains to what I'm talking about. Because these are recorded and I want to make a really good playlist for everybody. And in order to do so, it's going to be key to stay on topic. So where I'm not getting too distracted, I'm not jumping from one topic to another. So that way, if anybody has questions or they just want to learn, or they're new and they want to learn how I trade, then yeah, it's a lot easier when you're watching a video and the person's not bouncing around from side to side. Oh man, you guys. All right, it's about time, and I'm going to do this on the NASDAQ. And I'm going to talk about 2 strategies, guys. 2 strategies. One is going to be my slow markets, and one will be my fast markets. Tonight, I'm going to go over my slow markets, and then later, probably either tomorrow or Tuesday, I will transition into fast markets. So just a few more minutes, or actually just one more minute. Actually, right now, it's now 8:30 Central Time. So let's get started with the strategy session. So just a reminder, everybody who might have missed it, every single night tonight, the second part of my slow markets class, I'm going to be going over my strategy, and now is the time, 8:30 p.m. Central Standard Time. Let's go over how I trade. Now, I want to make sure I make this very clear. I have two ways of trading. Number one is the way I trade my slow markets class. That comes at 8 p.m. Central Standard Time. The markets are a lot more slower. I look at higher time frames, and a lot of my trades, I will place them, and I will put a stop loss in, I'll put a take profit in, and then I will let those trades run overnight while I'm sleeping. The second one is when I'm trading more volatile markets, like the New York Open or the New York session, where the markets are moving a lot more volatile. And that's where I use a little bit lower time frame charts. For example, I will use a 5-minute chart and a 100 tick chart. And I'm in and out of positions a lot more quicker than holding a trade overnight. But first of all, it is slow markets. That's what I focus on. That's where I learned how to trade. And so I believe it's only correct for me to teach and go over my slow market strategy first, because that's how I learned how to trade. And then that will also flow over to fast markets, because the way I analyze the market from the slow markets perspective is the same way I analyze the markets in the fast markets perspective. It's just a different time zone, or a different time frame, forgive me. And before we do that, I'm going to go ahead. I had that gold trade, and I'm going to go ahead and put a take profit on this gold trade that I need to make sure I do that. There we go. Because we're getting at max profit on this one. So let's see if we can get that one into profit. And let's go over it. So my slow markets class, and the way that I learned how to trade, and that I still trade, and it's been one of my most consistent strategies, or one of the most consistent ways that I trade. And I would say that, and from all of the statistics that I have over the past 13 years, 14 years, is my slow market strategy and my slow markets trading is a lot more consistent than when I'm trading the New York session, or when I'm trading my fast markets. And the reason being is there's a lot less human error, if that makes sense. Because when we're trading, and as humans, we tend to self-sabotage, especially when we're in and out of trades, when we are watching our screen, when we're watching our trade and watching the P&L. Us as humans tend to screw stuff up. And I do the same. Everybody that I've ever traded with or talked to, it's the same thing. It doesn't matter how good of a trader you are. It doesn't matter how long you have traded for. You have a habit to screw things up the more times you interact as a human. So that's why I've really loved trading slow markets, in terms of I place a trade, I put a stop loss, I put a take profit, and I go to bed, and then it either hits my stop loss or my take profit. And you can imagine there's a lot less human error, because there's a lot less human sabotage to that. So let's go over that. My main market that I like to trade, of course, is the NASDAQ. I like to trade the NASDAQ, gold, and crude oil. But these examples I'm going to go over is going to be specific to the NASDAQ, and it's basically the same thing. The same type of trading, the same type of technical analysis I do on the NASDAQ is exactly the same as the crude oil or the gold. It's technical analysis. It's one of the most simplest forms of trading that I have found, and I use higher time frames. So for example, I like to start on the daily, and if you join me every night during slow markets, it's almost the exact same. It's pretty boring when you do it every single night, night in, daily. it gets boring. And everybody I've talked to, including myself, is when it gets to a point, good trading, real trading, and the most consistent trading is really, really boring. So I start on the daily chart. And by doing so, I get a really good sense of market direction and how the market's been reacting, regardless of what news is going on. So I do not care about what news has happened, what news is like, whatever news has affected the market up until this point, because the markets will tell me everything, right? It's a perfect market in a sense that if something happens, the market reacts. The market always reacts first, and the market will always be irrational, and it does not have to do what you think it will do. And so that's why I love technical analysis. So let's get through this, because I only have one chart when I am analyzing the markets for the slow market strategy. And so let's go over, and yeah, bear with me if you've tuned into slow markets before. It's very repetitive. So this is a daily chart, and I like to get a look at what we're doing, what's going on in the market, and I'm going to go through that with you right here. So the first thing, as you guys all know, this is a key support zone. And so going into the night, I want to be a little bit more to the bullish side, where there's some support. We can imagine that we could see a nice, maybe either a retracement or rally off this support. And it will also lead to some really good risk-reward setups. The next thing I would like to see, we had a nice sell-off. So the current trend, the intermediate trend, which means, for me, what is the current trend? What's the market currently doing in the most immediate future? And that is selling off. The market is in a bearish intermediate trend because we have sold off the last 4 days. But overall, the longer term trend here on the daily chart, we're bullish. So we still want to be bullish in the market. However, since we are going to be day trading, we have to understand that the current condition, the intermediate trend, is bearish. And so that way we don't want to get caught into any shorts, because we very well could break down from this zone and sell off. The next thing I like to do, since I have this zone in place, I like to zoom in to a 60-minute chart. And same thing, same technical analysis. I want to see where's the support and resistance. If we look at the hourly chart, it pretty much aligns with the daily chart. For this example, we see there's a lot of support and resistance in this zone. And so this is a zone that I want to look for a long, okay? And let's talk about risk reward, where I'm saying when we're in these zones at these higher time frames, we like to get high, or at least myself, I like high risk reward trades where I'm looking for a 4-to-1, 5-to-1, 3-to-1 risk rewards, and I'm okay to lose 60, 70% of my trades, and understanding that even though I am losing 60 to 70% of my trades, because I'm having a higher risk reward, I understand that it has a positive expectancy, and over the long run, it would be profitable. So based off this, let's talk about the hourly chart. Now I'm zoomed in. Now we know that this is a zone. We are in a zone for the NASDAQ, and I'm wanting to buy the market. And the next thing I like to see is, first, where's a good area to enter? Talking about risk, how much I want to risk per trade. Typically, it's 1%. I really like to risk 1%. For example, if I am trading a 150K account, I like to risk 0.25%. And 0.25% is about $375, give or take. That could go from person to person. I'll talk more about the risk maybe another day. And maybe I spend 1 or 2 days solely talking about risk. But I want to talk about how I'm getting in, what I'm looking at tonight, and then we'll talk about risk another day. Even though it is one of the more important things, let's just solely keep it to the technicals and what I'm looking at for my slow markets. So over here on the hourly, this is the zone that I want to buy. And within this zone, based off the daily and based off those higher time frames, I'm looking for longs. And then we could also see that there is another zone. As you can see, there's some resistance around 740s, and there's also some support. And if I get out of this one, you can see it's a lot more clear, right? And as we zoom in, we gain clarity. I like to make sure we're using multiple time frames. So, the 18th, we found a lot of support. We found a lot of buyers and support on the 18th and the 19th. And then we did again on Friday. And once again, we did that at the end of the day where this was resistance. And during the open tonight, we jumped up, we've held above this, and now it's starting to look like it's becoming support again. The next thing, this looks like a decent long where I could possibly get in long. I could have my stop loss, somewhere below this support zone. Maybe I even have it all the way down, say down below where we gapped up. So I like to start marking up like areas where I'd like to buy, where I'm going to be putting my stop loss on this higher time frame. So for example, this looks like a decent area to put my stop loss if I'm going to be getting into a long somewhere up here. The next thing, I like to zoom in all the way down to a 5-minute chart. So for slow markets, the 5-minute chart is the smallest chart that I'll zoom into, right? So I've done all my analysis on the daily. I'm doing it here on a hourly chart, and then I did it on, now I'm going to do the same exact thing, same thing, copy paste. Everything I did on the daily, I did on the hourly chart. And so now I'm going to do it once more right here on the 5-minute chart. So basically, it's the same story. We could see this support here. This was Friday, and it's becoming a little bit more clear. And as we start to zoom in, we're starting to gain a lot more clarity. And, it's becoming support again. And we're actually starting to rally off of it. So that was actually, that could have been a perfect trigger to get in right there at the reversal. But I don't want to talk about, I'm getting ahead of myself. So I'm just going to mark this right there would have been the trigger. So we're seeing a lot of support in this zone, and we're seeing it and I remember we started on the daily, then the hourly, and now we're all the way down to the 5-minute. The 5-minute chart is where I like to execute. That's where I get triggered in. That's where I make those final decisions of where I'm putting my stop loss, where I'm getting in at, and where my take profit and stop losses are going to be. So we had a lot of support there. And the next thing I like to see is, okay, when we get down to this support zone, right, this big support zone, I like to look for some type of reversal pattern. If you guys know, there's so many different reversal patterns. I have a poster that I keep in my room of the different reversal patterns. Simple 5-bar reversal. Everyone knows what a 5-bar reversal is. If not, you can Google it. I'll probably talk about that a little bit later. But any type of technical reversal pattern, maybe a consolidation and a break of consolidation. So first of all, let's talk about the stop loss. This to me is a decent place for a stop loss. It's below a pivot, right? So we could choose this to be a stop loss because there's a decent pivot right there. The next area for a stop loss could be below that. So maybe we have a stop loss at 682. That would be below a nice, I say pivot, but pivot, support and resistance. This is a support resistance level. There's another support and resistance level down here, like below 680s. Now, the next question is, which one is better? That's always one of the hardest decisions. Is this a better stop loss, or is this a better stop loss? Or even below all that, could you justify below all this support as a decent stop loss? And I will argue yes. The further away your stop loss, the better your odds are. However, you're going to be risking a lot, right? Because the further away your stop loss is, the more you have to risk depending on how big of a position size you have. So I like to have a little bit of a tighter stop loss. I would prefer having my stop loss below this support and resistance, and it was just really a personal preference based off of the way that I analyzed that hourly chart. And I'm now at the 5-minute chart, because you can see there is a lot of resistance here around these 730s, and there's also this gap, and a lot of times if we do break below that, we would fill this gap, and I might as well call it a loss there. There is also an argument, and this is something I would do, is maybe I just have my stop loss at the other side of this support and resistance. And so I'm thinking about those things first. And let's just say this didn't happen. Let's say we're right here. Okay. I'm waiting and I'm watching and I'm looking for I only spend about 2 hours in front of my charts every single night when I'm looking at this, and I'm not watching the markets. Like, okay, I'm going to watch, I'm going to watch, I'm going to wait, I'm going to wait. I'm doing this exact analysis. I do it on the NASDAQ. I'll do it on the crude oil. I'll do it on gold. And sometimes I'll do it on the Nikkei. So I'll do it on every market, and I won't sit here and watch the markets. And so let's just say I did this analysis, and I did it, say, and the market's right here. So originally, my stop loss would be down here because this was the last support and resistance. If we sold off, then I would wait for consolidation. So this would have been a good trade. I did take this trade. You guys seen that before. Let's say I came in and this trade already happened. I would wait, and then we had the same thing. We sold off, and I'm either watching for a 3-bar reversal, or I'm waiting for the market to consolidate, and maybe the market started to consolidate. I see this as consolidation, where the market's spending some time in and around a zone. And what I mean is this is that support and resistance zone, right? So we see that there's some support, there's resistance, there's support, and it's very basic tech. And look, we could even zoom all the way back. This is the zone that I am wanting to get in long. And yeah, what I mean by zone is there's a lot of resistance and a lot of support within an area of this price action, right? For example, you can't pinpoint an exact price. You can't say 774 is support and resistance. No, it's always a zone because the market does not move perfectly. It's easy to say in this area, the odds of the market either reversing or breaking through it are higher, right? I hope that makes sense. So here we are again. So I'm going to go ahead and get rid of this one. Owen Bates, your technical analysis is bad. I'm going to continue. I'm not going to get distracted by the chat. I've been trading consistent and profitable as one of my major full-time incomes using this exact thing. So keep your opinions to yourself when it comes to aspects like that. So here we are. We're at a key support and resistance zone. The next thing I want to look at is a breakout or a breakdown. So now, based off of the analysis of the higher time frame, say an hourly or a daily chart or that hourly chart, or even my 5-minute chart, I'm looking to go long. Remember, so my biased, say, would be to the long side, if that makes sense. So I'm looking, and all my technical analysis is to the long side. So everything I'm looking at tonight based off the NASDAQ is to the long side. I'm looking to buy it. I'm looking for an area to buy it. I'm looking for good risk rewards to the long side. I'm looking for areas and opportunities to buy this market. Just right now and just for this example. There's a lot more that I will go into depth because we're on an intermediate down, right? We're trending to the downside. And as we've seen on the daily chart and as we've seen on those hourly chart, we are trending to the downside. And like I said, the odds of these trades on the intermediate side are less likely. I would be losing these trades 60 to 70% of the time. However, when I do have a profitable trade, you get a 3-to-1 risk reward. You get a 4-to-1 risk reward. Sometimes you get a much higher. There's plenty of times where you could get a 9-to-1, a 10-to-1. If you're getting into multiple contracts, you let a runner run, and you could catch 200 or 300 points, and you have these really, really running trades that far exceed and far outweigh the percentage of losers. So anyway, I'm getting distracted. So anyway, this is that consolidation zone, and I'm looking to get long in this zone. And so I would be looking for the consolidation breakout. For this example, we're either going to be consolidating here for a period of time, and we're going to be looking for the market to break out of this consolidation and get in long. And this is probably one of the hardest things. There's so many hard things to this. For example, I'm trying to think of a way to explain how simple it can be, but yet these fine little nuances is one of the hardest parts of trading. Because I could explain a consolidation breakout, but then everybody's going to trade it a little bit different. So for example, this is a consolidation, but getting into a breakout on this consolidation is everyone's going to do that a little bit differently. So one is you can put an order at the top of this consolidation for, say, example 790, and you could do a buy stop. And this is saying the market can consolidate. The market could even go down. So let's say if we continue to sell off, I will not be triggered in until after we break out of this specific zone, right? So we're consolidating. Maybe you even want to look for a consolidation down here, maybe to the 740s. It doesn't really matter. Like I said, everyone's going to be analyzing the market their own way. They're going to be seeing support and resistance a little bit differently, because the way I view the markets are going to be a little bit different than anybody else here in the chat, and the way they view support and resistance. And so somebody could be looking at the 730s as a great zone to buy, and then someone could even be looking at, if we sell off down to the 700s, as a good area to buy. The idea is that you find an area that we are looking to buy to find that reversal. So is this making sense, guys? Like I said, I'm trying to explain it in a way that it's not too confusing for some traders who are really new, but then it's not so boring for traders who have been here a while. Steve, yes. Double top, double bottom. Yes, it makes sense. Okay, well, I'm going to keep going. And like I said, let me know. I'm trying to keep an eye on the chat. And the moderator is still putting some good questions in here as well. So anyway, that was a zone, right? And we sold off. And let's just say we're looking at this next zone. It's going to be the same exact thing. We're going to wait for the market to get into this zone where we are looking to get long, right? And we're either going to be looking for consolidation, we're going to be looking for a 3-bar reversal, we're going to be looking for something to where it's signaling us into a long position. Give me 1 second. We have to get rid of all the spammers in the chat. So anyway, so same thing as of right here, right now. It's very hard to do a live example because hindsight's 2020, and it's a lot easier to trade based off of hindsight. I'd like to get real examples. So let's say we're doing the same analysis. We're wanting to get in long, and if we do sell off into this zone, then we're going to be looking to the exact same thing. I would want my stop loss to be lower. Maybe there's an argument now that if we're going to be getting in long around this zone and our stop loss could now be justified, we could put it lower, right? For the same amount of risk, where we're getting a better price. So instead of getting in at the 70s, where our stop loss could be here, we're actually getting in at a cheaper price which would be possibly the 40s. And then our stop loss can be 68, right? And it's the same thing. Maybe we continue to sell off and maybe you're looking to get in around 700. Then you could justify your stop loss being 650. Are all three correct? I mean, for me, I would take all three of those trades. Maybe you take a loss, you take another loss at this zone. And if this does sell off and break through, I would take 3 losses. And if it does break through, say, 650, that'd be 1 loss, 2 loss. I would take 3 losses on this particular example. If the market just sells off, it's just 1 loss, 2 loss, 3 losses, looking for a 1 to 4. And so it really depends. And that's how I'm looking at the market. So let's just say we are looking for, do we say this zone? Yeah, this is just going to be an example because we very well could sell off and fill this gap. But let's just say we're looking to get long. And if we were to get long around this zone, this particular zone, I would like my stop loss below, say, 683. Now, some things that I'm looking for is that list of technical analysis, whether it's a 3-bar reversal, whether it's a double bottom, whether it's a consolidation and a break. It's really up to you. I've used all of them. I sometimes like to do 3-bar reversals. Sometimes I like to do a consolidation breakout. It really is up to you depending on what you like, depending how confident you are on that trade. It's not an exact black and white thing. It really is not. It's not saying if this happens, then that. And it's not only if this happens. There is some, I don't want to say instinct. There's some discretion that we must use as traders, because if there was 0 discretion, then you could just program a computer to do this, which people pay, millions and millions of dollars for people to program algorithms and robots and strategies. And guess what? The market's always changing, and those programs fail. Those robots fail. They might work for a period of time, but they're always going to be needing to be adjusted. They're always going to be needing to be changed with the markets. And so that's why I'm saying there is some discretion when it comes to this. But the overall technical analysis, looking for support and resistance, is the same. So we're same thing, looking for support and resistance, looking for some type of technical analysis to say, this is going to trigger me into a long. This is going to trigger me into a short. However, for me, stop loss, my discretion would say below this support and resistance. I could argue, say 650 in terms of a good stop loss. However, it tends to get too far away, because if I was to get into one contract, that is becoming too much risk for me. When it comes to either this stop versus this stop, that's a difference between 30 points. So anyway, that being said, let's watch. I think this could be a good one. We're coming up to the end of class, and this is the hard thing, because it's only 30 minutes, and 30 minutes could be very long. But when you're going in detail about a strategy, 30 minutes seems really fast, guys. And now remember, this is a live class. This is not scripted. So you're going to hear me, missay or say things not edited. And that's the reality of a live class. So it's very difficult to teach a live class and try and break it evenly into 30 minutes. But let's try it. Like I said, tomorrow night, it's going to be the same thing. I'm going to go over my regular slow markets. I'm going to spend another 30 minutes talking and expanding on this. Hopefully there's going to be a lot less to talk about in terms of, I'm not going to be able to, I don't need to repeat what I just did. And we'll see if we can go further in depth. So that being said, the last thing I wanted to say is when the market gets to this zone, it's a good area for support and resistance. Very simple. Just look for some type of reversal pattern, whether it's a 3-bar reversal, whether it's a consolidation and a break, whether it's a double bottom, whatever you feel that you're comfortable with finding. Is one better than the other? Honestly, no. Just whatever you do, try and be consistent. Like right now, there's an argument to say you just buy it when it gets down there. And if somebody says when we get to this zone, just buy it, and if they're able to make that strategy work for them, so be it. Right now I'm looking at a 3-bar reversal. Like this, we could see a 3-bar reversal right now. So the 3-bar reversal would be at the break, and this is nice because it's happening live. We came down to this zone, and we're finding some buyers again. And to me, a 3-bar reversal would be a break of this previous candlestick's high. So this was the last 5 minutes. The high of that candlestick, I would consider a 3-bar reversal, and that would just trigger me in. I would put my stop loss either down here. It's risking $1,300. This is a mini. That's way too much for me. The bottom of this 5-minute candle, 385. I would actually like the bottom of this candle, this opening 5-minute bar. I might be risking an extra $100, but this is another one of those discretionary things, guys, where do I have my stop loss below the 5-minute bar that just reversed, or do I have my stop loss below the 5-minute bar that opened up? The difference is going to be just over $100. And that's another discretionary thing, right? We're always going to be running into situations like this. Where do we have our stop loss at this point, or do we have it at this point? And that is up to us as a trader to understand, what our strategy is. Experience in the market, right? Do we risk 350? Do we risk 480? Yes, having my stop loss wider, it increases my probabilities. Having my stop loss tighter, it decreases my probabilities, but it increases my risk reward. And then for my take profit, I could have a take profit all the way up to 830. That could very well be it, where this could be a beautiful 4-to-1. 4-to-1 risk reward. The odds of this working out, unlikely. I would lose this trade 60 to 70% of the time, but when they do work out, it has a positive expectancy, just depending on what you're looking at, depending on the analysis on the hourly to the daily, the hourly, and down to the 5-minute chart. So there is, if you believe it or not, in the way that I like to trade, there can be a lot of discretion. And the question is, how do you teach discretion? Well, hopefully this is a good example, and this is a good start to the week on how to trade. Like, this is how I trade. This really is. I personally would prefer my stop loss a little bit lower. I would have my take profit up here. If I'm in 2 contracts, for example, if I entered into 2 contracts, I'd be risking like $900, and my take profit would be $3,000. So risk $900 to make $3,000, and I would I would close out of my platform. Like, I would have this trade set up. There's been times where I have one take profit, and then I have another take profit all the way up to these highs, right? So maybe I have a take profit all the way up here if I'm in 2 contracts. And I'll go over more in depth tomorrow on the take profits, the stop losses, having 2 contracts, and I'll do more in-depth analysis tomorrow when I have more time. So that was really rushed. That was only 30 minutes, but I think that was a great start to that particular trade, I guess, or that trade idea. Now, will I take it? No. Like I said, this was an example only. This is 100% an example only. This was not a real trade. Remember, this is not a signals class. I did the risk disclosure. This was purely an example and not a recommendation. So if you're trying to judge, you shouldn't be buying here, you shouldn't be selling here. Nope, it's purely an example. So, all right, guys, take care, and I will see you